As an auditor of RST Limited, and the P applied a concept of materiality of the financial statements as a whole on the basis of the obtaining additional information of significant contractual arrangement that drawing attention to particular aspect of company's business, he wants to reevaluate the material concept. Please guide him. Revaluation of material concept. What is an SSA 320? Materiality is a planning and performance of the audit. So 320 materiality in planning and performance of the audit. So before planning, before upon performing the audit, we may find some error. How we are going to deal with this? Auditor shall revise the materiality for financial statement as a whole and as if applicable to materiality level of particular class of transaction, particular class of account balances or disclosures. In the event of becoming aware of the information during the audit that would be cause the auditor to have determined different amount initially. So when before conducting the starting the audit, and they would say that the amount of 10,000 was a materiality. By of seeing the misstatements, he may say, okay, we need to create increase the risk. So the risk has been increased, so materiality should be decreased. By the way, audit sample size should be increased. So this is the approach the auditors need to take when they are doing this kind of audit. Okay. So this is the main goal of materiality concept, SA 320 plan materiality planning performance of the audit. Revision in materiality may happen as a result of change in circumstances that has occurred during the audit. Example, decisions or dispute of major point of the entity's business. So kind of disposing of the company is disposing of a major business. So this may the reason for materiality change in new information, some information which is more crucial and that may present a new threat to the company's financial position. So they need to change the materiality. Change in auditor's understanding of the entities and its operation as a result of further audit procedure when before the auditor has understood that this entity has this kind of process and environment, but due to the audit trial they have found that there is totally different approach need to be taken. By understanding the organization environment and entities and as business operation, they may change the materiality. If the auditor has concluded that a lower materiality of the financial statement as a whole and as if applicable materiality level for a particular class of transaction, account balance and disclosure, then the initial determination is appropriate. Auditor shall determine whether it is necessary to revise the performing auditoriality and whether the nature, timing, extent of the further audit procedure remain appropriate. So, as per the auditor's professional judgment, he need to think how we going to see that. If his professional judgment says so, the materiality need to be changed. He need to change it. If not, no problem. Does Mr. P re-evaluate the materiality concept after considering the necessary of such revision?